Greetings, Algo Artisans. We're going to do a quick chart wrap up for the week, and we're going to take a look at what might be happening next week, and we're going to jump into the charts right now. Okay, so let's go ahead and start with Bitcoin. This was a chart that I put together a few days ago. This is the daily chart, price going back to March. This is the common look that we get at the beginning of each of these shows. So you should be pretty used to seeing this if you are watching the Algo Factory shows every day. And if you have been watching the last couple of days, you might have seen a very profitable trade form up, as I did say that this would happen. We have a head and shoulders formation with a sloping neckline. What does that mean? Well, let's talk a little bit about how head and shoulders operate, how I choose my targets, and why that sloping neckline is a bit more profitable than if it were not sloping or if it were sloping the other way. Okay, so I've drawn a head and shoulders that is in this case, a head and shoulders bottom. This is one that would break to the upside. Now, the way that I take targets on a head and shoulder, and this is a bit of a lesson here, is that I do a Fibonacci extension. The line on which I place that tool is going to go from the apex of the head, right straight up in this case, but up or down to the neckline. That's the line on which I will apply the Fibonacci extension tool. Here is the trend-based fib extension. I start at the head, I move up to the neckline, back down to the head and to the right, and you can see these fib extensions up above the neckline. A little nomenclature here. You have your head, you have your two shoulders very clearly marked out. Well, this part across the bottom is called the neckline. Now, these two targets, the 1272 and the 1618, those are the Fibonacci targets. You have the 1272, the 1618, and I front run those. I usually take targets just a little bit before those happen because everybody else is probably taking targets right at that, and some people like me are front running. So that is how I do. And of course, I would look back to the left to see if there is any structure in the way, because structure trumps fibs in my testing, right? So if there was some kind of a structure like a pivot recently that happened lower, right? Price came up, price came down, and a pivot was lower than this 1272, then I would adjust my target to be below that pivot. That's how that works. In this case, we're just doing an example, so we'll go to the real thing here in a minute. So this is a regularly slanting neckline, and the breakout is probably going to be over here. You saw that alert on the screen. I'm already in that long, so I don't need to do anything else. Price would eventually come down here, break out here. Now you're going to have a breakout right here at this right shoulder, and as it breaks out, there are two ways to enter a head and shoulders trade. Okay, so you can simply enter right at the breakout. It's a little bit more risky, or you can let price come back down, grab liquidity, and then pull up. Bitcoin in particular, and it does always help to know your asset and your asset class, Bitcoin often moves without coming back down to the neckline. In this case, as we're going to see in a moment, it actually did come back down to that neckline. However, with Bitcoin, I tend to go ahead and just take the risk, go long, and my stops are going to be either structurally based on some kind of structure on the right shoulder, or maybe a different method. You can learn about that stuff over at algofactory.tech. We won't go into details here as to how I do my stop. If I am fortunate enough to see price pull back to the neckline, I may simply add to the trade or adjust the stop to use that structure. One of the two. So that is how this works. Now, when a neckline is sloping down, what does that mean? It means that price was heading in this direction, right? So that neckline and all of the measurements that apply to the Fibonacci, they're more or less the same. The neckline's a little bit deeper, but what really matters is that this is deeper. This exit of the head and shoulders is deeper. So when you have what you could say is a negatively sloping neckline, you have a lot more room for profit. So this here was a 389. Now, this did move our Fibonacci targets down, but the overall opportunity for profit is a bit greater. So let's just say that I use more or less of that same formula, and I enter right at the breakout, and I'm just going to kind of eyeball the stop loss. Now, this is a 6.52 to 1. Now, it might be a little deeper, it might be a 5, whatever it is, but just because this was sloping downwards, you get almost twice as much profit potential, right? And this is just a hypothetical situation. It might not be twice as much, it might be more than that. It really depends on each one. But this downward sloping neckline gives you a lot more room for target and a lot more room for profit. So let's go ahead back to the real world example that I went ahead and put out just a couple of days ago. And the people in my private group got to see it first. However, people who are watching mine and Gorilla via the Gorilla's public YouTube here, the Algo Factory, got to see it pretty much as is. And again, we don't give investment advice. We don't put our trades up and say, hey, follow our trades. We're not a signal service, but But with the Algo Factory group, I do share my trades for educational purposes, and there's a decent chance that other people, because they have similar methodology to me, probably are taking similar trades, if you catch my drift. So in this case, this is what the trade would look like. A breakout at the neckline. If somebody took that trade immediately, I'd imagine that their stop loss would be below some of these wicks right here. That's just an example of where the stop could be. Some people do ATR based stops. Stop's going to be based on your own methodology. And then if I were to use the Fibonacci extension tool, start at the head, go to the neckline, and then roll down and to the right, you can see that 1272 is right here at this line, and the 1618 is right at the top of this big consolidation. What a beautiful trade. Just based on this stop loss that I really haven't deeply calculated, we're sitting in a 5-to-1. And of course, taking profit off halfway up, probably turn it into like a 3.5-to-1, which is an absolutely beautiful trade, especially when you can mitigate your risk by taking money off halfway up. Okay, so this is a gorgeous trade, and I did this for everybody to see. Now, as price goes up here, I would be cognizant of this 1272. I'll probably take off half the profit in a trade like this, and then move my stop up to entry, quite possibly, depending on what the algos say and what the price action has done. In the end, it does seem as if price is probably going to continue up from here, and that 56.5 was the low. Doesn't mean that's absolutely the case. Things can change, price can go down. There are scenarios where price could even dip down into the low 50s or even the high 40s. Nobody knows the future, but right now I am of a bullish bias. If something changes in the price action and the algos reflect a move down, then my bias changes. Nothing is set in stone. However, this is a great look right now, and as Bitcoin goes up and breaks its all-time high, which might take a few weeks, it might take a few days, the rest of the market is probably going to act in concert. You're going to see a lot of other altcoins do well. The whole market should get pulled up from there. And one clue that all of this might be done going down is that you have a lot of large groups actually buying Bitcoin right now. For example, the Wisconsin Pension Fund. And there are a couple of other big names that are piling into the ETFs. So that is a big deal. Okay, so let's move over to the gold market. Not a whole lot to talk about here that's different to the last time we spoke. However, you're looking at a trade that I put on earlier on Monday for the private group for educational purposes on Monday. Everybody got to see it back then, and it is already about 65%-ish in profit. And this thing is a 3-to-1. And that's a deep, deep stop loss. You know, I could have been much, much more risky on this one. What I could do, if the algos allowed, I could add to this. Even now, it's a little bit late to do it, but the risk to reward is there. I can treat this pullback as a bit of structure, put on a smaller trade because it's a little more risky, and build a position because it does appear the price will continue up. Gold, as we've been talking about for years, via the Gorilla and myself have been talking about for years that gold is bullish. And I think gold's going to hit 2,600 quite possibly by the end of the summer. And I think that by the end of the year, $3,000 gold is extremely possible. So this is, again, a beautiful trade. And as price breaks this top, that might be, in my opinion, and just my opinion and not investment advice, if price breaks this top, this all-time high of 2430, I might look at another trade, especially if I see a pullback to that high, and then these targets would still be in play. So I might wait to see that top broken before I risk a long, and especially if I get a nice pullback, could see a nice relatively tight stop if the algos do allow that. That's a 5-to-1 right there as well. But gold and silver I do see as pretty bullish right now. But I am going to move on to Forex, and I want to talk about the USDJPY because this is right now a very interesting pair to trade. It is a very risky pair to trade because what we seem to be looking at is a currency war. I've covered this ad nauseum. I'm not going to cover this too heavily today, but it does appear that a nice trade on the JPY is forming up. Might be a little late to get into it. I kind of walked away from the computer, but if there is a pullback for liquidity, I might look for a short that looks something like this. Let me zoom in on this to make it easier for everybody to see. So giving away a lot of free alpha on this show today, and I do this all day long, especially during the private live lab when people have questions about whatever they're looking at. People might have questions about, hey, can you chart this for me? Like this stock, can you chart the S&P 500? I do custom charting in there based on people's requests, and a lot of times that can bring trades into the picture. In this case, I would be looking at a Fibonacci retracement. So here's the retracement, and the 618 is right here at the bottom of this area. The reason I like this area is because on the way down, price came down, bounced up to here, and then moved back up. Well, this little W bounce right there created structure. So I'm going to get out before that structure right here. And that's right at the 618. So quite frankly, I could simply get out at the 618. And of course, I do have algorithmic exits. I have where my algos will tell me, hey, it's just time to get out right now. That does limit my risk, which is always ideal. But if I were to take a look at the volume nodes using the fixed range profile, we're going going to see a lot of price action right below the 0.5, and then we're going to see a lot of price action down low. But where we don't see a lot of price action is around that 618, and price tends to want to go towards the price action. So I may simply adjust my entire trade and have only one take profit right there in this volume node, because that would make a lot of sense. Price would go down to grab liquidity right there. I don't want to enter this trade right now. I want to see price pull back a bit, grab liquidity, perhaps a bearish retest where price did break out of this consolidation, and then perhaps come back up to grab liquidity, and then I would probably go short on the JPY at that point. The thing about the JPY right now is that I would not take a trade until there was a solid direction, because of this trade war. Things are a little bit unpredictable, and I'm only assuming it's a trade war. I don't talk to the Bank of Japan. I don't talk to all these muckety mucks. I just understand what's going on with their currency, and it does seem that that is a trade war. So until I see a pullback and a clear, I do see a clear direction. I think price will head down at least for a little while, but until I see a good pullback, and then the pullback also is accompanied by algos that tell me I can go short, that won't be a trade that I'm going to take, right, until that happens. So good quick review of the charts today. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build trading algos. It's trading methods like you see on the screen. People don't have to know how to code or do computer coding or anything like that, although we can help people build what is called an auto trader. They can build an algorithm that is coded, and we can put them on the road to doing that as well. In the meantime, we do have a customer here who is very happy with us. Please have a listen as to what he says right now.
Hey, Cowboy V, I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 Great Financial Crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
Okay, thanks for listening to that. AlgoFactory.tech. Don't forget, trade your job, upgrade your life. We'll see you on the next one.